Hello, this is Steve Warshaw, the trade detective from RecordPriceBreakout.com, and today I wanted to go over a short pick, James River Coal Company, stock JRC, symbol JRCC, that was a trade we opened up early on Wednesday, and in the past 3 days has turned over a nice 30% profit. So, from a technical standpoint, just a quick couple of points when trading something short. One of the reasons why I picked this particular stock right away was because it was in a nice downtrend, as you can see, and it bounced up to support or to resistance, which just happens to be recently the moving average, the 50-day moving average, and that average is seeming like a brick wall for this stock right now. Ever since it turned over in late July, the 50-day moving average has definitely become a ceiling. There was a whole slew of bearish signals for this stock in late July. You had a 12-day and a 50-day bullish or bearish cross in the moving averages, and I'm going to highlight that here. And if you take a look at this current pattern, you will see that the 12-day moving average is also heading down towards the 200-day moving average, which is very bearish. And if the stock continues on its downtrend, of course, the 50-day will eventually close below that 200-day moving average. So, a few things to look at. I closed the trade for a nice 30% profit here. However, the stock is now closed below the 200-day moving average twice, which is a nice bearish signal, and you can use that to your advantage for certain. I would wait for the stock to bounce back up and see if the 200-day moving average does indeed become resistance. So let's take a look at why we entered the trade, as well as far as our technical indicators to support why we went ahead and opened the trade. Let me grab my trend line tool here. And as you can see, this is the PPO, which is very similar to the MACD. And if you look at price, you got lower low, lower low. It actually put in a slightly newer high, then lower low, lower low. And if you look at what the MACD, or I'm sorry, the PPO is doing here, it's creating new lows with price. When that happens, when there's no divergence between the PPO and price, that's a pretty good sign that the trend isn't quite ready to turn around and go back the other way. So let's go ahead and scroll down for a little bit more. This is the Wilder DMI indicator, and it is an indicator of the current strength of the trend. And any number, people will argue about this, but any number above 20 to 25 is considered a pretty strong trend. So when I see that with this, you see this red line on top, that's the negative directional index. When I see that is the current prevailing trend, and then the ADX line, which is the white line, is saying that the current prevailing trend is strong, and yet there was a bounce in price. Notice how the strength of the downtrend is going up, and we hit this bounce in price. That's usually a pretty good sign that once that bounce hits resistance, that it's going to turn back around. So you have a strong negative trend, and that supports going short in that particular market. And then, of course, the Williams percent R, which is an oscillator. The oscillators tend to work better in non-trending markets. However, this one go ahead and gave us a great signal right when we decided to short this stock, when it went above the minus 20 line here, signaling basically that the current position was overbought and was ready to come back down. So you have three very bearish signals in the indicators on top of the downtrend, and added upon the moving average signals. You put all those things together, and you make a nice profit. So we got in here around $34 and closed the trade out at $24.26 is where I recommended you close the trade. The original target for the trade was $20, but I decided with sort of the volatility in the market and the skepticism with the bailout plan, and who knows where the market's going to go, that it was probably a good idea to go ahead and take profits. And then, of course, the final signal for me was this lower volume bar here on this down day. This is signaling that the bears might be starting to run out of strength. So that's the trade. That's why I opened it. That's the profit, and that's why I would have closed it. And I hope you enjoyed this technical lesson. And of course, if you have any questions, please feel free to email me. That's steve@recordpricebreakout.com. Take care.